is you're still creating something that has an edge. You're just systemizing it essentially. So there's no wastefulness of it. So that's how I felt about volume. I wasn't able to use volume the way I wanted it, just based off the time frames that I trade, but it doesn't mean that it's a waste. Just a little bit harder in the Forex market because we do have these natural ebbs and flows through different time periods. So if you look at your volume at the bottom, right, you guys notice like a little bit of a pattern, right? Do you guys see it? It goes blue, green, yellow, blue, green, yellow, blue, green, yellow, kind of like a normal ebb and flow. So if you imagine like your volume tool being this, right, it's kind of just a normal natural ebb and flow. The reason for that is because Forex trades through different sessions, right? We have London session, we have New York session, we have Asia session, right? Different sessions have different volatilities where you can imagine your London session and your New York session are your most popular session. Those are the two biggest markets in the world. Your Asia session is when things tend to slow down because the US is closed, London is closed, and you have your overlap, of course. So you're naturally going to have bigger volume spikes in the sessions that have the most activity, right? Does that make sense, guys? When you have your most, when the popular kids are in the building, right? London and New York, you're gonna have more volume regardless, right? So you're always gonna see those bigger spikes during those sessions. You're always gonna see smaller spikes during the Asia session. And the thing about volume is that in using volume in trading, what we're doing is we're making comparisons, right? There's no, in Forex, and this is what makes Forex different than the stock market. And I remember having this discussion with Mike Bellafiore as he was looking to he uses volume a lot in his stock trading, and he was looking to see how did Forex traders use it. And I was not gonna lie, I was pretty honored that he reached out to me. Now we're in good places with S&B Capital, but still, like to have a legend like that reach out to me for Forex advice was like, this was years ago. I'm like, yeah, oh my gosh, yeah, pretty cool, right? I still have these I'm still a student, so whenever anyone that I admire reaches out to me and I get all giggly and whatnot. But because there's no central bank in Forex, there's no actual true volume because the volume is only based off of your specific data provider, right? There's no, each data provider has their own quotes and their own flow and whatever like that. Now, does that make volume useless? No, because there's only so many quality brokers out there, and you could assume that the action is going to be very similar. So although the number it has no meaning at all, the differences in volume you can assume is going to be the same across the market. So when it comes to using volume, what we're doing is we're making comparison from one candle to another candle or one price point to another price point to make a decision about whether volume is kind of increasing, decreasing, stuff like that. The same way we look at like high and low momentum candles. We don't necessarily look at high and low momentum candles as having a very specific like quantitative range. We see that, hey, like this is a bigger candle in comparison to the last four candles, therefore momentum has increased. So the problem with that in traditional volume, if you're using most time frames, is that you're going to have those ebbs and flows, so it's going to be hard to make those comparisons. So what I found is that a daily chart, you can do it because you get, it takes the whole day into account. So looking at volume on a daily chart is going to be relevant, in my opinion, right? Because you're taking the single day, all of those sessions into account each time. Or looking at volume on a lower time frame perspective is going to be relevant because you have this isolated section of, hey, this is the London session. I'm not really looking at the Asia session or anything like that. From a swing trading perspective, like a 4-hour hourly is kind of in there as well. It makes it more difficult. But what you would do is, right, you would look at volume and get an idea for when that breakout is likely to happen. And not just volume, it's called volume spread analysis, or different words for it. But you look at volume in comparison to the type of candles that are being printed. So you use your ability to read a candlestick, and that's something that we should all have, right? To understand what a candlestick mean and what story it's telling us. We use that story. We look at that with our volume. We make comparison to previous stories and previous volumes, and then we're able to make a prediction of, okay, like this volcano is either about to erupt or nothing's going to happen. And that's a good way to, if you're someone that wants to establish yourself in a position prior to an expected breakout, that's a way that you want to do that. Hope you enjoyed today's lesson. If you guys want more, make sure you head over to our website, www.tier1trading.com. You can sign up for the risk-free trial membership. Gives you access to our live trading room where you can join us live for sessions like the one you just saw. Also gives you the opportunity to download software, take some courses, and network with a great community of traders. So check it out today, www.tier1trading.com. If you have any questions, let me know.